Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, it was turning out to be a fairly, quiet session, a session with a downward bias. But we did well to recover from the opening lows. But some of that recovery is also now seemingly fizzled out. Given the fact that the Sensex has slipped into the red, it's down just about 5 points. But fizzled off from the day's high. The Nifty, although, is holding on to some gains. 29 points higher on the Nifty. So, we are clinging on to that 25,750 mark. But at one point in time, we were closer to that 25,800 mark as well. But the good part is that the broader end of the markets are cruising along today, 0.7% kind of gain on the Nifty mid cap index. So yes, it is outperforming the benchmarks. Mind you, we are coming off a 2-day losing streak on the benchmark indices and even the mid and small cap indices. But today, for now, it seems that we are poised to break out of that 2-day losing streak. Last week, of course, on a weekly basis as well, we had snapped out of a 4-week winning streak. As we speak, the Sensex is back in the green, up 20 points now. The India VIX deserves mention because it has surged another 4%. Mind you, it had gone above that 12 mark and of course now again up 4%. So, it is above that 12.5 mark as well. So, it seems like the volatility is increasing and there is some bit of a caution as well on the street. The advance decline ratio 3:2. On the NSE, 1665 advances to 1241 declines. On the sectoral front, it's the real estate pocket or real estate index that is perched on solid ground. That index is up over 2%. Last week as well, the real estate pack did well. PSU banks, they are extending their gains. The Nifty PSU bank index is up another 2% last week. On a weekly basis, the index gained 5%. And remember, this week, of course, SBI, the banking behemoth, reports numbers, and ahead of that, the Nifty PSU bank index upbeat. And of course, if you talk about the Nifty PSU bank, it's the likes of Indian Bank, Bank of Baroda, Canara Bank, all of these counters are up and about. Bank of Baroda, of course, up somewhere around 5% on the back of a surprise. On the NIM front, it surprised positively. The margins were up 5 basis points vis-a-vis expectations of a decline. So, yes, Bank of Baroda, that's among the top movers on the Nifty PSU bank index. Pharma as well staged a good comeback after a weekly loss, 1% higher on the Nifty Pharma index. Banks, of course, doing well, a 0.5% uptick on the Nifty bank index as well. And metals continue to shine as well, 0.5% gains there as well. What's not doing well? Two sectors, IT and FMCG, these are among the top laggards. Let's take a look at some of the individual movers as well. Shriram Finance, of course, deserves mention. A slew of news flow around there. Numbers came out. There's been a change at the top level as well. CEO and MD, we have a new CEO and MD at the helm, so that's there. And of course, there's a Moneycontrol exclusive as well. We'll talk about that. The stock is up 7%, hit a record high today. Tata Consumer, after numbers, numbers beat expectations, which is why the stock is up somewhere around 3%. You have M&M after weekly loss has stepped back into the green. Apollo Hospital Eternal as well has broken out of its losing streak. Tata Motors passenger vehicles, that stock is up 2%. Good October auto sales data, which is why we are seeing the likes of M&M, Tata Motors upbeat. SBI ahead of numbers this week is among the gainers. Sun Pharma Cipla as well among the gainers. What's not doing well? Maruti, despite good October sales data, most argue that the stock has already seen a fair bit of a run up, so some bit of profit taking there, down 3%. TCS is among the laggards. ITC from the FMCG pack. BEL, after a good set of numbers, seeing some bit of profit taking. L&T as well. Nestle India, Tech Mahindra, Titan ahead of numbers is also under pressure. So, all in all, individual stories really. On the index level, we are flat, but we have, for now, snapped out of a 2-day losing streak. On that note, let me bring on board our first guest for today. Joining me is Ashutosh Mishra, Head Research Institutional Equity at Ashika Stock Broking. Ashutosh, lovely chatting with you. First of all,
Thank you.
We're coming off a 2-day losing streak. We did reclaim that 26,000 level earlier on. a week ago. But now again, some bit of profit taking. We are seeing the Nifty see hurdle around that 26,000, 26,100 mark. What's your sense? Are we going to see some bouts of profit taking? Is it a buy on dip market? What are you making of the kind of moves that we have seen in the market over the last week or so?
Surely buy on dip market. If you look at a corporate profitability in this quarter, what we are clearly seeing is that the profit is in line with expectation or slightly above the expectation. As well as what we are seeing is that management commentary are turning very positives. Even on a lead indicator like
Hmm.
GDP growth as well as GST collections, if we try to look at inflation and the demand at a ground level, this clearly indicate that Q3 and Q4 is going to be very good for Indian corporates. And that growth will be both in the terms of the value as well as somewhat of volume as well as somewhat of value growth out will be there. So keeping that in mind,
Hmm.
the result are quite good, and second half looks quite healthy. And maximum the negative is already in the price, like no US India trade war. Most probably we will not have any
Hmm.
more negative on this front. If something come, it will be a positive. So keeping that in mind, probably this is the market of buy on dip. Yes, we are no seeing some headwind. Last 1 year market has not done any great no on an index level, but individual stocks has done phenomenally good.
Point taken. Individual stocks, of course, it has been about individual stories only. The reaction to results have been fairly upbeat. As you mentioned, we were of course heading into the earnings season with very very muted expectations, and as per that we have seen strong beat coming out of most of the numbers that have come out till now. But let's talk about sectors, break it down to sectors, so to say. Real estate stocks have been, holding on to solid ground of late, and today as well, that index is up almost 3%. You've had strong demand momentum, and it has been supported by healthy absorption as well. Balance sheet of listed developers are fairly robust, and there has been increasing participation in the luxury housing segment as well. DLF, for instance, has bagged 15,800 crore rupee from Dahlia sales, as luxury housing demand seems to be picking up. Prestige, of course, saw robust sales. You have good numbers from Phoenix Mills as well. Plus, the good part is that the real estate index on the whole is still 15% away from its 52-week highs. So, is it a good time to hunt for value in some of these real estate names? And if yes, which end? Commercial real estate, luxury housing? Where should one look for value?
So surely, I totally agree with you that no macro factor are indicating positive trend for the real estate. Even from an interest rate perspective, if you look at, and we are expecting one more rate cut, and given the improving purchasing power among the Indians and rising rent, clearly indicate that for the real estate things will be looking good from here. Yes, there was some slowdown. Because of some really high numbers which they have scored in the last few years post COVID, real estate sector has been totally re-rated in the past 4 years, and on high base there was some little bit of slowdown in the last 6 months or a year if I say, but things will be start looking quite good for them. Interest rate cut is one of the major thing where the real estate get positively impacted. Along with that, rising incomes is clearly indicating a positive no indicator for this sector. My view is that both commercial space as well as residential will see a good uptick. Today only we have initiated
Hmm.
one of the real estate stock, and we clearly like no even Lodha's number. If you try to look at it's clearly indicated that the way they have delivered the performance in this quarter is clear indication that the largest player, if they are delivering such a healthy number, such a strong growth number, then whole sector is going to see a lot of traction. Uh, so in that term, sector is going to do quite well from here onward.
All right, real estate sector poised to do well from here onwards. But one stock that's hogging the limelight today is Shriram Finance, and it's two of factors, right? Numbers were a beat on the back of lower credit costs. Management also sounded fairly upbeat. They're saying that there are not seeing any stress in the CV, CV end of the spectrum as well. And on ground, there is an uptick in demand as well. And of course, aside of that, there is a money control exclusive as well. My colleague Hamsini Karthik has reported that in what could be 2025's largest deal in the NBFC space, Japanese major Mitsubishi UFJ Financial Group is in advanced talks to pick up a 20% stake in Shriram Finance, and a deal is likely to be announced soon. That's according to sources. Now, the 20% stake in the vehicle lender could be picked up for almost $3.5 to $4 billion, or approximately 33 to 35,000 crore rupees by way of capital infusion. We've seen a spate of such deals in recent times, Yes Bank, RBL Bank, and, a few others as well. And now if this goes through, this will be the another instance of,
Samman
global
Capital is
capital
also one.
chasing, Indian. And of course, that's true. But in terms of Shriram Finance, the stock is already at record highs, and management commentary was also fairly upbeat. There is a new, there's a change at the helm as well. What are you making of this whole up move and this whole development, and how should one approach the stock at these levels after the run up that it has seen? Do you see valuations being fair?
So valuation is still very fair for the, if you even long-term average, if you try to look at, no, they are currently trading at approx 2 times 1 year forward at this point of time. Uh, if we try to look at what are the growth drivers going forward from here, especially the space where Sriram operate, we are clearly seeing a lot of green shoots taking place, and Sriram is very well positioned for that. And what we require for growing any NBFCs is a capital. And as you are, all people are breaking the news that they are going to get no large chunk of capital, and that will, along with, will be coming a new management team who will be taking the organization to the next level. So it's clearly indicating more of a positive traction in the sector as well as stock. So what we are clearly seeing that the cost of fund which is coming down, the first leg beneficiary is NBFC, and that's why if you look at performance of NBFC versus bank, NBFC performance was far better in this quarter. Bank performance was on a positive front, led by few large banks which has and public sector banks which have positively surprised the market. But across the sector, if you see, then NBFCs has positively surprised in this quarter. And within that space, I clearly see that Sriram is very well positioned, especially in a commercial vehicle segment, where green shoots are clearly indicating that things will be looking much better for them. And with these changes and new capital coming in, no, I clearly see a lot of room for upside from here onward also.
Hmm. Okay, room for upside, and of course, would you be confident that it could see a re-rating as well going forward?
Yeah, it will. It will. See, one of the thing which, many of these companies were facing is that an existing promoter, like in the case of Sriram, also was like whether they will, what type of future growth or what type of capital they will able to provide for the long term. So any strategic investor coming in is really a positive news for many of these companies like Samman Capital, um, uh, Shriram Finance, Yes Bank, RBL, all these things were like, no, there was a concern about how they will fund their growth, because capital is a very important part in any bank or NBFCs, and if they are getting a
Hmm.
long-term investor, that is really a long-term positive for in a growth market like India.
Hmm. So within the
And
financial
regulatory alignment.
space, since you also pointed out that the NBFC performance has been much better compared to banks, would you tilt more towards NBFCs tactically?
So our house call was till now that prefer more NBFC than the bank till now. But now we say that bank and NBFC
Hmm.
both are well accordingly well placed. We are going to see one more rate cut, most probably either in December or February, and positive traction in the banking stocks also, because no, all the major negative is already in the price, and the second half is going to be very good for the banking stocks.
Hmm. All right, that's the view. Second half will be very good for banking stocks, and now, of course, NBF should be a good, a heady mix of NBFCs and banks. But let's talk about the other pocket that's upbeat today, auto index. Forget about the auto sales data. Of course, it was supposed to be good and it has been good, record auto sales for Motown. But let's talk about the move that we are seeing on the shares of Maruti today. Numbers came out on Friday. They were largely in line with expectations. Of Maruti today, numbers came out on Friday. They were largely in line with expectations. Auto sales were pretty good for October as well. Do you think it's just profit taking at play here when it comes to how Maruti has reacted?
Yes, in my view, is more of a profit taking in place. I clearly see a new cycle has started in auto sector, and no, the type of demand which we have witnessed normally is expected to sustain. It may not be that we are going to see the similar type of month-on-month demand, but when you look at a year-to-year basis, we are going to see a lot of positive traction in auto sector. We have many good launches even for the next year onward. We next year we have pay settlement for the central government employees, so that is another positive for the auto sector as a whole. Interest rate is also coming down, so macro factor income level clearly indicating that no, there is a pent up demand in the segment, and that's why at least for next 1 or 2 years, auto sector will be doing quite well. Yes, from the day GST cut was announced on the 15th of August, from that day we have seen a very sharp rally in auto stock. So somewhat of profit taking will take place.
Okay, expect some kind of profit taking, in autos every now and then. But let's talk about pharma. It's looking upbeat today, but there has been a few setback for the likes of Dr. Reddy's and Cipla. Semaglutide that was pegged to be the next big opportunity for some of these pharma names, but Dr. Reddy's has faced a setback in Canada. It's faced a delay in approval. My question is, does the launch pipeline get delayed and would it have any material impact on earnings going forward? Uh, you know, till now we had thought that it would perhaps enjoy the first mover advantage. Would that be at risk now because of the setback in Canada? And secondly, Cipla numbers were steady, but the big takeaway was Mr. Umang Vora is moving on. What kind of an impact would you envisage of this change?
So normally management change and deferment in regulatory approvals are taken negative. The two company which you have mentioned it about probably may say face some issues on that front. That how the new management is going to take it forward. And for Dr. Reddy, no, this deferment of the approval from the Canadian regulator was no a big setback for them out there. But if you look overall sector, so individually there will be few stocks which will be have a some of the negative factor. But overall, if you look at no, most probably we are very near to the Indo-US trade deal part of it, and this was one of the major hangover for the sector as a whole. So I clearly see that more of a positive traction to come in this sector, and this is a
Hmm.
sector where we are really playing a global theme out there, and at this point of time, there are more positives to play in from here, and even on approval front, the type of opportunity on the patent expiry is there scheduled for the next 2 3 years. Indian player are very well placed. Yes, there are some short-term issues which we may face, but sector as a whole is expected to do quite well.
All right, the sector is expected to do quite well, but I'm afraid we're running out of time. Ashutosh would like to thank you for taking out time and joining in. Look forward to our next conversation as well. I still have a few questions, but we'll save it for the next time. Thanks a lot for taking out time and joining in this afternoon.
Thank you. Thank you, Bhargav.
Thanks a lot. Well, on that note, take a look at the market. Just about 5 minutes to go for the markets to shut. 45 points higher on the Nifty. We are above that 25,750 mark. So, it looks like we are poised to end the day on a positive note. Mind you, tomorrow is the weekly expiry as well. So, and we've seen a bump up in the India VIX index as well. So, we are heading into the expiry day, the weekly expiry day with a fair bit of caution. Sensex extremely flat, but nevertheless we are trading with a positive bias. Mid cap index, the broader end of the markets outperforming. Take heart from that because portfolios at least will be looking much better than what the headline indices are looking like. 0.8% kind of a gain on the Nifty mid cap index. Breadth firmly in favor of gainers. It's more or less even Stevens, but skewed more towards the gainers. So 1629 advances to 1283 declines. And of course, talk about the Nifty Bank Index. It has only picked up traction and now it's above that 58,000 mark as well. 58,110 is where it's at, a 330 point uptick, 0.6% kind of gain on the Nifty Bank Index. PSU Bank Index has anyway been doing well. So that's up 2%. Nilesh Jain of Centrum Broking joining in this afternoon. Nilesh, very quickly, just 3 minutes to go for the markets to shut. Any BTST strategies?
Very good afternoon, Nandita. Absolutely. So, looking at the overall setup, looks like we may see a follow-up move in the coming session. So, IGL is one particular counter. We are liking this particular counter because it is giving a very good close. It is forming a bullish engulfing candlestick formation. So, looks like we may see a follow-up move in the coming session towards 220 to 225 on the upside. Our stop loss should be placed at 210. So, there's one particular counter as of now from my side as a BTST trade.
All right, IGL, that's a BTST trade from Nilesh. But Nilesh, tell me one thing. We've snapped out of a 2-day losing streak, but we've seen a fair bit of uptick in the India VIX index as well. And tomorrow is the weekly expiry as well on Nifty. So, would you expect a fair bit of caution and volatility? Because no convincing move, although we are in the positive, but looks like there's a fair bit of caution.
Absolutely, Nanta. So you have rightly pointed out the India VIX jumped over 4% today. It is trading near about 12.65. It is at elevated, no doubt, given the levels that we have seen earlier of 10. So it is slightly at elevated level, and tomorrow being a weekly FN expiry, the Nifty today unable to surpass 25,800 marks. So that's still acting as an immediate hurdle for the Nifty. A breakout, I would say a decisive breakout about 25,800 will provide more comfort on the back of short covering. We may see Nifty moving towards 25,900 to 26,000 as well. But for that, one needs to wait for that particular level to breach decisively. Till then, there could be possibility of Nifty oscillating in the range of 25,600 to 25,800. That can be a 200-point tight range. A breakout about 25,800 will open upside towards 26,000. Similarly, in the Bank Nifty as well. If you ask me, then Bank Nifty is giving more comfort than the Nifty index, given the kind of a setup we are witnessing today. It is managing to close above 58,000 marks. So that was acting as a psychological barrier that has been taken off decisively. So we are a bit bullish on Bank Nifty for upside target of 58,300, 58,500. Support is placed at 57,600 now.
Okay, more bullish on the Nifty Bank Index. There's about 20 or 25 odd seconds for the markets to shut. But since you mentioned Nifty Bank Index, how can we not talk about the Nifty PSU Bank Index? Because that has been the star performer, so to say, last week as well and today as well. It has been leading from the front. 2-3 counters. Bank of Baroda, of course, hit record highs after a strong quarter and list upgrades as well. How would you look at these names, the likes of Bank of Baroda, Indian Bank, and Canara Bank?
So, Nita, we remain bullish on PSU banking space as a whole. The stock that you mentioned about BOB is also in our preferred recommendation list. Along with that, Can Bank, SBI are the few names that we have been suggesting to our client as well. So, Bank of Baroda today hit a new record high with a big gap up opening. Looks like we may see a follow-up move in the coming session, which will take this counter beyond 300 marks. So, that's the short-term target that we are expecting. 282 will now be the immediate support for this particular counter. But yes, looks strong on the chart for 300 to 315 from a short to medium term perspective. Similarly, Canara Bank, we are still bullish on this particular counter as well for 150 to 160 kind of levels on the upside. Stop loss should be placed at 135. And lastly, index heavyweight PSU banking counter, that's the State Bank of India, where our target price of 1,000 plus is very much intact. So buy and decline should be the strategy, keeping a stop loss below 930. SBI is also buy.
All right, SBI, that's also buy, and 1,000 target intact on SBI. Of course, the behemoth also reports numbers later this week. But let's take stock of the market close then. 41 points higher on the Nifty, 25,763. That's where we've shut shop. Sensex up 40 points. 83,978, that's where it shut shop. Broad end of the markets were showing strength, with the Nifty mid cap index higher by almost 1%. Nifty Bank Index saw good traction, picked up steam and it has ended above a crucial zone of 58,100. It's shut shop above that level. Advanced decline ratio in favor of gainers. Although some bit of a dampener in terms of the India VIX index that surged by 4% and it's above the 12.5 mark. But we've already spoken about all the big movers. Let's take a look at some of the movers and shakers on the broader markets. Nifty 500 index woke hard, deserves mention. That stock was up 10%, followed by Gravita India, Schaeffler India. Jubilant Pharma, that was another one that saw 6% up move. Latent View, Intellect Design, Godrej Consumer Products, and I'll touch upon the stock in details in a bit, but it has made some bit of an acquisition and it has found favor. The street has given a thumbs up, and the management is expecting a stronger second half. Which also I think found favor with the street, although numbers were a tad below expectations, but nevertheless the stock was up about 5.5% or so. Home First Finance, Chola Mandalam Finance, Aditya Birla Fashion that reported numbers today. I think it was Arvind Fashion, not Aditya Birla Fashion. Force Motors, Minda Corporation, GE Vernova reported good set of numbers and the stock was up 4%. On the flip side, among the losers, just want to see which are the top losers today on the Nifty 500 index. NetWeb Technologies, that was down 6%. Zensar Tech was down 5%. Aptus Value Housing, that's also down. JK Cement was down. Patanjali Foods, that also came out with numbers, that was down 4%. Acme Solar, Blue Dart, Sirma SGS, all of these counters were under a fair bit of pressure. But let's talk about Vedanta as well on that note. Shares did see good traction after a mixed set of numbers. There are some brokerage notes where they have kept their buy rating on the stock. With CLSA, in fact, it has a target of 580 rupees on the stock, and of course, it has noted the fact that the company has guided for EBITDA of over $6 billion for FY26. And of course, it is also confident that the demerger will be completed by the end of FY26. Any thoughts on Vedanta? How are you looking at this stock post numbers?
So the structure is looking strong given the kind of consolidation that we saw in last 1 year in this particular counter. We did saw a dip all the way towards 350, 360 kind of levels. And from those levels, we have seen a sharp rebound as well. So looking at the overall setup, looks like it's a 1 year long consolidation breakout that we are witnessing today. And overall setup looks strong. Positional target comes somewhere around 560 to 600 on the upside. So that's the position target, and buy and decline should be the strategy. 480 should be the stop loss. If at all you see any meaningful decline towards 500 or 490, that can be a good entry point, and look strong for 560 to 600 from a position perspective.
Okay, looks strong from a positional perspective. That's about Vedanta. But let's shift gears and talk about Tata Consumer. It reported a profit growth of 10.5%, revenues rose 18%, EBITDA was up 7.5%. Margins although narrowed down, but they were above what the street was working with. So all in all, numbers were a beat on expectations. And if you look at the entire FMCG basket, this is one stock that has managed to fare well. If you compare it with the likes of HUL, ITC, etc., this stock has done much better. At 1195 or so, what is the call on a Tata Consumer? It's in fact hit a fresh 52-week high in intraday trade today.
Yes, overall setup looks strong. As you have rightly mentioned, within overall consumption basket, this has been one of the outperformer and looks like it is heading towards a new record high as well. So we continue to remain bullish on this particular stock for upside target of 1240 to 1260 from a short to medium term perspective. And again, a similar approach here as well, since it is trading well above its all long term and short term moving average. So better strategy would be to buy and decline, and it can be added in a staggered manner as well. Good portfolio counter. 1155 should be the stop loss. 1240, 1260 is the short to medium term target.
Okay, that's the short to medium term target. But any thoughts on Titan ahead of numbers? It is expected to hand in a double digit revenue growth. And pricing gains in gold is expected to aid the top line growth according to Elara Securities. Centrum is also expecting watches and eyewear to clock in a 25% and 5% growth respectively. Titan, of course, losing some sheen today, but how are you really positioned in this particular counter? In the last 5 sessions, it hasn't really done much. It has given negative returns. Would you expect sideways moves here on? What would be the next trigger and what would be the next level to watch out for?
Well, Nandita, if you just pull up last 2-year chart, you can clearly see since January 2024, the counter has been trading in a very tight range on the upside. Multiple resistances in the zone of 3800 to 3850. At the same time, there are important support in the zone of 3100 to 3200. So that has been a broader range for this particular counter, and we still believe that it is likely to oscillate in this range. But looking at the recent development that we have seen on a positive side, with that, the stock has surpassed all short-term and long-term moving averages. So there could be possibility of a stock breaking the barrier on the upside and moving towards 3900 to 4000. So these are the position level. It's a very good setup can be seen in this particular counter. But ideal strategy would be to buy on decline. The stock has a very strong support at 3600. That should be the stop loss for the long position. And immediate target would be 3800. If it breaks 3800, then it will be considered as a 2-year long consolidation breakout. Then target will be seen near about 4000 to 4200.
All right, that's the view, buy on dip strategy on a Titan. But let's now shift focus to some volume buzzers, some momentum stocks, and want to understand whether one should really chase the momentum here or not. I want to talk about Dredging Corporation. It rallied over 40% in the last 5 sessions. It has been given, positive annual returns in the last 3 years. Of course, there's been an announcement of MOUs worth 17,500 crore rupees. That's perhaps another trigger for the stock. But Dredging Corp, I think it was up, as I said, 40% in the last 5 sessions itself. Should one chase the momentum?
Well, Nandita, I think it's too late to chase because today it's again up around 20% and was on upper circuit as well. So there could be possibility of another gap up opening in this particular counter. So the risk and reward is certainly not favorable, as you have rightly pointed out. 40% move we have seen in the past 5 sessions. So not advisable to chase because there are high possibility of getting stuck at the high level. So better strategy would be to buy and decline. But if somebody is already holding the long position in this particular counter, can ride the momentum, keeping a trailing stop loss below 860, and upside seems to be open for 950 to 1000 from a short to medium term perspective.
Okay, too late to really chase the momentum. But what about Strides Pharma? That also managed to hit a record high, 4th straight day of gains, 26% almost in the last 4 sessions. In fact, one of the brokerages, DAM Capital, sees room for re-rating as well. Here, is it too late? How is the risk reward looking?
Well, the stock has given a good breakout today, and we did see some bit of consolidation in last almost 4 to 5 months. So it's a kind of a 4-5 months consolidation breakout. I think yes, one can chase the momentum here, keeping a stop loss below 945, because looking at a fresh breakout, the target on the upside comes somewhere around 1030 to 1060. So keeping that in mind, that's the positional target. One can buy this counter at current level and on decline. The overall setup looks positive given the kind of a buy crossover that we have seen in the MACD as well. So overall, yes, it's a buy at current level and on decline kind of a structure for Star.
All right. That's about Strides Pharma. Another one, LG Balakrishnan, it saw its biggest single day gain in at least 5 years. It has gained in 5 out of the last 6 sessions. In fact, the positive commentary from the management as well, they have stuck to the revenue and margin guidance for FY26, and they are targeting, to maintain margins at 17%. And of course, they've said that steel industry has started doing well, and because of that, it's supported positively. How are you looking at this particular counter? Is it a sell on rise kind of a candidate, or how should one approach on the charts? What is it really looking like?
Well, Nandita, if you look at the broader structure over the years, we have seen this counter has been in a secular uptrend. As far as the trend is concerned, it is looking on a positive side. But if you look at the volume, which is not quite impressive in last couple of months, although today we have seen a good volume spurt of over 24 lakh. But looking at the illiquidity, is not advisable to chase this counter at high level, specifically after a move of over 15% in today's trading session. So again, clearly the risk and reward is not looking favorable. If somebody wants to make a fresh entry, the ideal entry point would be somewhere around 1520 to 1550. So fresh entry should be done on declines only. And at high levels, one should refrain from creating any sort of a fresh position. If somebody already holding the long position can ride this momentum for upside target of 1700 to 1750, keep a stop loss below 1500.
Okay, that's the view on an LG Balakrishnan. I just want to talk about a GE Vernova as well. Numbers came out, they were pretty strong. The stock has literally doubled in the last 6 months, but the stock did cool off from the day's high today. I think it hit a high of 3,323. That also happens to be a 52-week high, but settled only 4.5% higher at 3,165. Is it looking overbought, overheated? How are the charts really stacked up right now?
I'm not able to find out the script. Can you please help me out with the script code?
It's GE Vernova T&D India Limited. That's the stock.
Okay.
If you can find it.
Right. So is it trading somewhere around 3,165 rupees?
That's correct. That's correct.
Right. So yes, GVT&D. So this particular counter, again, a very beautiful setup can be seen. This counter has been in a strong uptrend. It's trading well above all long-term and short-term moving averages. Today, we have seen good price and volume breakout. The volume spurt that we have seen today is higher than the average of last many weeks, I would say. So a good setup looks like it is heading towards 3,300 to 3,500 levels on the upside. 3,000 will now act as an immediate support, or I would say a strong support. So if somebody is already holding the long position, can ride this momentum towards 3,300 to 3,500, and fresh entry can also be done on declines, keeping a stop loss below 3,000.
All right, fresh entry can also be done on declines on a GE Vernova. But let's talk about Wockhardt. Numbers came out and the stock did see a very, very sharp reaction as well. 9% higher, although on a 6-month basis we've seen positive returns, but on a YTD basis the stock is still giving negative returns. Are you seeing a positive bias on the charts?
We have seen a gradual decline in this particular counter, all the way from 1,800 to it has declined to 1,300. Looks like merely a pullback after a sharp dip that we have seen in last couple of months now. It is still trading well below its all long-term and short-term moving averages. So there could be possibility of supply coming in near about resistance zone of 1,500 to 1,600. So I won't recommend going long in this particular counter, specifically after a move of over 9% today. The risk and reward is again not favorable. So it's an avoid from my side.
Okay, avoid from your side. That's Wockhardt. But before I let you go, we spoke about a BTST strategy, but for a longer term, maybe for 4, 5, 6, 7 trading sessions, or even for the medium term, any recommendations?
Yes, Nandita. So there are a couple of recommendations from my side. First of all, if you look at the Realty pack as a whole, we have seen a strong momentum and a rebound, I would say, in the Nifty Realty pack. So all the real estate stocks are looking positive. One particular stock, that is Lodha Developer, is looking attractive at current level. It has formed a good base formation. We are likely to see a follow-up in this particular stock towards 1,280 to 1,300 on the upside. One can keep a stop loss below 1,200. So Lodha Developer is a buy. Now, another stock that is looking positive is from exchange counters. So both MCX and BSE, in fact, are looking positive on the chart. BSE specifically, this particular counter is looking for a buy for upside target of 2,600 to 2,680. So these are the two targets on the upside. Given the kind of a setup on technical front we are witnessing, we can see a clear breakout from a horizontal trend line, as well as on derivative front, we have seen a good build-up on the long side as well. So one can keep a stop loss below 2,480. Target would be 2,600 to 2,680. So these are the two buy recommendations from my side.
All right, those are the recommendations coming in from Nilesh. With that, Nilesh, would like to thank you for taking out time and joining in. Always a pleasure chatting with you, and I look forward to our next chat as well. Till then, be good and of course have great trading sessions.
Thank you, Nandita. Thank you for having me on your channel.
Thanks a lot. Well, those were all the recommendations and chart talk, so to say. But let's shift focus to some of the stocks that are on my radar this afternoon. One stock that deserves mention, of course, is Godrej Consumer. Reported numbers on Friday post-market hours. Numbers were tad below expectations, but of course, it has made an acquisition. Because of that, we saw a good uptick in the share price today. Management also pointed out that they are expecting a better recovery in the second half of the current financial year. Of course, we were anticipating GST-led disruption to impact earnings in this quarter, which is exactly what has happened. But second half of the financial year is expected to be stronger as per the street. In fact, most of the brokerages have also retained their buy calls on the stock. In terms of the numbers, the revenue rose over 4% on a year-on-year basis. Margin stood at 19.2%, easing from 20.7% in the last quarter. The company's India business remained healthy, with sales up 4% and volume growth of 3%, supported by double-digit growth in non-soap categories. In fact, CEO Sudhir Sitapati also said that the recent GST rate cut is a welcome structural reform, but of course it did cause short-term disruptions as trade channels adjusted, particularly in soaps and hair color. Internationally, the performance was fairly mixed. Indonesia saw a mid-single digit volume uptick but a 7% sales decline in constant currency terms, while Africa, the US and the Middle East grew strongly with 25% sales growth in rupee terms. Latin America and others saw a 9% decline in rupee sales. In fact, the CEO also said that the performance is expected to improve sequentially through FY26 with a stronger second half. The company, of course, remains confident of achieving high single-digit underlying volume and revenue growth, supported by robust domestic demand, continued innovation, and operational discipline. Aside of that, if you look at some of the brokerage views on the stock, Goldman Sachs has raised the target price to 1425 rupees per share. The acquisition of men's face wash brand Mooch Stack was highlighted by Goldman Sachs, in fact indicating that the company's efforts to expand its product portfolio and tap into the growing market segments will bear fruit going forward. The market's positive reaction, in fact, suggests that investors are focusing on the company's growth potential and strategic initiatives that it's undertaking rather than the short-term profit decline. Now, as GCPL or Godrej Consumer navigates through temporary disruptions and continues to expand its product range, investors and analysts appear optimistic about its future prospects in the competitive consumer goods sector. In fact, management was on CNBC TV 18 today and they are expecting high single-digit volume growth in the India business. India margin is expected to return to normative range in the second half, with the worst seemingly behind them. Indonesia is expected to take a few more months to achieve revenue and margin growth, and according to the management, Mooch Stack can become 4 to 5 times in the next 3 to 5 years. This acquisition will be margin accretive according to the management, and they are going to scale up their pet care business launch in the next 2 quarters as well. Of course, they are also banking on higher growth from the newer categories. In fact, if you look at what Jefferies has to say, they have a buy call. The target price is also similar to what Goldman Sachs said, 1400 rupees. Volumes, of course, grew 3%, and that, according to Jefferies, managed to beat expectations. India business was soft, according to Jefferies, but Africa business was strong on the back of a boost due to forex. Margin recovery is expected ahead as well. So that was one stock that was in focus. Despite missing expectations, the stock saw good traction today. I think it was up somewhere around 3.5% or so. But aside of that, another thing to watch out for will be the IPO of Grow that opens for subscription tomorrow. Of course, we've seen how the IPO street is only heating up. and there have been so many issues hitting the streets, Grow being one of them, and even Pine Labs that opens for subscription later in the week. Lenskart IPO is also open, for subscription now. But the investment platform Billion Brains Garage Ventures, that's the parent company of Grow, backed by Peak 15 partners Sequoia Capital, Tiger Global and YC Holdings, is set to launch its 6,632 crore rupee maiden public issue for subscription. In fact, it opens for subscription tomorrow. The company, is valued at a little over 61,000 crore rupees, and it's of course bigger than its listed peers, Angel One, Motilal Oswal Financial Services, 361 WAM and Nuvama Wealth Management. The IPO price has been fixed at 95 to 100 rupees per share. The anchor book, of course, will be launched today, and the issue will be open till the 7th of November. The allotment, of course, will take place by the 10th of November, and I think it will be listing on the 12th of November or so. Of course, the company will issue fresh shares worth 1,060 crore rupees, while investors Peak 15 partners, YC Holdings, Ribbit Capital, Internet Fund, Kaufman Fellows Fund and Sequoia Capital, among others, will be selling 55.7 crore equity shares via the offer for sale route. Now, promoters including Lalit Keshre, Harsh Jain, Ishan Bansal and Neeraj Singh hold a little over 28% stake in Grow, while public shareholders own almost 72% shareholding in the company. Now, of course, that is one IPO to watch out for, and of course, here on Moneycontrol, we'll also be getting you an interaction with the management tomorrow morning. But in terms of the usage of funds, the company will spend 152.5 crore rupees of the fresh issue proceeds for cloud infrastructure and 225 crore rupees for brand building and performance marketing activities. Further, it will use 205 crore rupees, and invest in subsidiary Grow Credit Serve Technology, that's an NBFC, for augmenting its capital base, and 167.5 crore rupee will be used for funding margin trading facility business of its subsidiary Grow Invest Tech. The remainder funds, of course, will be used for its inorganic growth through unidentified acquisitions and general corporate purposes as well. So, yeah, that's one big IPO to watch out for, and of course, it opens for subscription tomorrow, and we'll be getting you the management interaction as well. So, of course, you need to keep watching this space for that. But all in all, an okayish day for trade, given the fact that we managed to snap out of a 2-day losing streak. Tomorrow we'll see how things pan out, given the fact that it's weekly expiry and there is a fair bit of caution, as is being indicated by the India VIX index, which ended high by over 4%. So let's see how trade pans out. But for now, strength in the broader end of the markets, and we've managed to end in the positive zone this Monday. So November at least has started on a positive note. But with that, we are completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Have a great evening and come back and join in tomorrow again at 9 a.m. on Opening Bell with a lot of stocks to watch out for, market perspective, and of course, we'll be taking up all your stock related queries as well. See you then. Thanks a lot for watching.